Hello and welcome everyone here. We're excited to have you here with us today and for the amazing conversation we're about to have with our incredible guests. One guest in particular, James Oliver, has been a longtime member of the Fourth Effect. We're thrilled to partner with him once again because we believe shining a spotlight on our members and the incredible work they're doing, and because they always bring us such great topics. So happy to be here, happy to introduce James. But before we dive in, a little bit about the Fourth Effect. So we are a high impact platform for startups and visionary executives to connect to drive growth, innovation, and boardroom success. We match startups with game-changing advisors, diverse board candidates, and investors to help them scale smartly and effectively. For executives, we're a gateway to break into the board candidate pipeline and gain valuable advisory experience and step into the world of early-stage investing. We have over 3,500 founders, executives, investors, exchanging mutually beneficial opportunities on our platform currently and welcoming new members every day. So come to a platform tour, check out, learn about how we do the magic we do. We'd love to see you there. And Sarah's dropping the link into the chat right now. And so now, without any further ado, James, please introduce yourself, your work, and tell us about that very cool t-shirt you have on.
Thank you so much. Welcome, everybody. So my t-shirt. So this says, "Get you a therapist." So I'm wearing this t-shirt in honor of, we just announced a new project we're working on, the Kabila Founder Mental Health Fund. And we got a generous grant from Techstars co-founder and my friend, Brad Feld. And we're going to be providing free mental therapy for the startup founders in our Kabila community. So I'm super excited about that. And oh, by the way, our Kabila community members, they actually get 3 free months in the Fourth Effect on the platform there. So that's a wonderful perk that Kat and Breen offer to us. Is Breen on the call? Breen here?
No, she's out today.
Okay. But yeah, so I'm excited about this shirt, and I'm excited about to be doing that work, to helping founders with their mental health. So I can drop a link in the chat if folks want to learn more about our community as well. I'll do that in a second here. But so I got to introduce myself. Yes. Okay. So I'm James. I'm a husband to an amazing wife, dad to the world's cutest twins. I'm a 3-time founder, a Techstars and Generator alum. I'm the co-founder of Kabila, which connects overlooked founders to capital, customers, and co-founders. I'm also a managing partner of Kabila Ventures, which I'm now launching after completing VC Lab, the world's leading accelerator for new fund managers. Kabila Ventures will invest in overlooked founder teams. And the reason we're doing that is because the data is pretty clear. According to the Kaufman Fellows Research Center, overlooked founder teams have historically given investors a 30% greater return. So Kabila Ventures endeavors to do good, but also to do well financially for our investors. I recently saw an article. I was just Googling. I was wondering how many VC firms were led by a Black GP, and I think it was like 2 to 3%. Like Brahma, I don't know later on if you've seen any data around that. I would love to get your take, but 2 to 3% of all VC firms were led by a Black GP, and we all understand that representation matters, especially if we want to make an impact in investments in overlooked founders. And for me, my vision is when Kabila Ventures is successful, overlooked founders around the world will no longer be overlooked, which ties back to the purpose of this event, why investing in underrepresented fund managers and founders is a strategic opportunity. So if it's all right, Kat, I'd love to transition into introducing our speakers. So we have 2 speakers here today. We're super excited to bring to y'all. So Brahm Rhodes, I met Brahm at the Black Venture Summit in Tulsa, right? Back in September. That's where we met, right, Brahm? Yeah. And he also went through VC Lab, which was amazing. So Brahm is the general partner at Malika Ventures. Brahm Rhodes, PhD, is the founder and general partner of Malika Ventures, which invests in early stage climate tech companies through a climate justice lens. He's a mentor and advisor of accelerators, including Excel and Village Capital, and an advisor to Boston University on AI education. Brahm's a multidisciplinary engineer and has developed innovations across multiple industries, including climate tech, AI, ML, autonomous systems, energy, entertainment, and healthcare. He's a former NIH research fellow at Harvard Medical School. He holds multiple engineering degrees from Boston University. Welcome, Brahm. How are you, sir? And then we have as well Veronica. Veronica is CEO and founder at TravelSys. Veronica has been a friend of mine for, like 4 or 5 years now. So Veronica is the CEO and founder of TravelSys, a visionary leader dedicated to transforming the travel industry with innovative technology through cutting edge technology, making airports around the world more accessible and efficient for everyone. She has over a decade of experience in the airline industry and a deep passion for technology and innovation. She's dedicated herself to solving the complex challenges faced by travelers and airport operations. And TravelSys is a groundbreaking enterprise software solution that harnesses the power of AI to optimize human capital management in the world's busiest airports, enhancing operational efficiency and passenger experience. Welcome, Veronica. How are you?
Hey, thanks for having me.
Yeah.
So good to hear from all of you and the incredible work all three of you are doing. So thank you for joining. So why don't I kick it off with some questions? I think I'll start with you, James and Brahm. Like, what inspired you to become fund managers?
I guess I'll go first since James hesitated. Actually, I've been, working in the startup space in various capacities for pretty much my whole career, mostly as a founder and operator. I spent some time living overseas, and when I came back, I was like, all right, what am I going to do next? I thought I had another startup in me. I was like, sure, maybe I'll just do another startup. But then I thought about impact, and I felt like I could have a bigger impact being on the investing side and working with a lot of companies solving, providing solutions for what I thought were critical problems, both, around bias and stuff in AI, building responsible and safe AI systems, and then now in the climate space. So I thought I'd have a bigger impact.
Amazing. How about you, James?
It's funny. It's the same word, impact. I went through Techstars Austin before it shut down. We finished the fall of 2022, and we went through there and we were building a co-founder matching app, and the app was designed to eliminate unconscious bias, because we think that there are great founders from all over, and we didn't want people making biased decisions about people instead of focusing on the things that mattered. And then I had this community, which I still have, for overlooked founders. And as we started thinking about our business model, we were like, it just makes a lot of sense to spin up a fund so we can have maximum impact. So yeah, the same word for me is why we started Kabila Ventures, starting Kabila Ventures Impact.
I'm sure that will be the theme of the day. Veronica, would love to hear your inspiration behind your company.
Well, thank you. One, thanks for having me. Thanks, James and Brahm, for doing this as well. I've always been a problem solver, my whole life. And I, created solutions for large corporations, and I saw my peers, bringing their ideas to life and getting funded by it. So I just decided to solve a problem of my own. And at that specific time when I was starting TravelSys, the problem that I was facing was that there was no dedicated service available to me and assist me when I was traveling with my daughter at the airport. And so I decided to provide a solution, and it went from a B2C solution at that time to now we identified, 2 years ago, we identified a overlooked market that is a huge market for the entire airline industry. And we created a solution for it that is a game changer for everyone in the world and how we travel.
Fantastic. So then let me boomerang back around with this question. So how do you all think about, how does diverse leadership in venture capital drive better investments and industry growth? Let me start with you, Veronica.
Well, people like myself, we seem to find these unique overlooked categories that, where everyone is betting on the next, ChatGPT, we're solving real problems, and we're solving it in a very unique way. Even though, we're in a heavy time with, this unforeseen or unexpected political climate, we're still out here solving problems and changing people's lives. I know we all spoke about the statistics. We all know the statistics, but we're still betting on ourselves. We're still, creating a lot of market opportunity. We're still driving higher returns than other founders. It's just, unfortunate that, when we need capital to scale it's very hard for us to find it.
Right. James, what are your thoughts?
So I think you need people who are going to be intentionally looking for non-pattern match outlier opportunities. And, you find that when you start looking at quote unquote diverse leadership, people who are, not looking for the same old. And when you get that, those opportunities, when you get those investments, we all know that those opportunities, they do drive historically better returns. So I think that's why that matters a lot.
Makes sense. And Bram?
Similar to what both Veronica and James just said, I think the fact is there are high quality, exceptional founders in every group, whether you divide that by race or age or gender, and that what they're not presented with is the opportunities to build great companies. And they're not presented with those opportunities because of both conscious and unconscious bias. Black founders or women founders are seen as a bigger risk, and they're actually not. The data shows that teams with women on them produce better outcomes. Teams with diverse founding teams produce better outcomes. But we still make the decision based on, us at Maleka, we make the decision based on, is this a good business opportunity? I mean, we invest through what we call a climate justice lens, which means that we put the emphasis on who is going to benefit from the innovation, not on who built it. So we don't actually have a diversity mandate at Maleka, but our pipeline is about 80+% diverse founders. That's without even trying. Right. We're not looking for diverse founders. They come because they're solving the problems that other folks aren't, and that opens up new markets, and some of these markets are huge.
Amazing. So you kind of touched on it, but are there any key factors to when you're considering or evaluating founders and assessing their investment potential that you could highlight?
Yeah, I mean, we look for founders that have shown evidence of getting things done. I usually say that with a much more spicy word, which I won't repeat here. But they demonstrate an ability to execute, but we're not necessarily looking for, were they at previous startups? Did they work in, big corporations? We want to see that they have demonstrated an ability to execute, but we're not necessarily looking for those check the box markers. They worked at Apple or Facebook or anything like that. But that they demonstrated the ability to get things done. They bring domain expertise, whether that's from professional or lived experience, and that they can show us that they recognize what good talent is, because we know that they're going to have to build a team around it. So those are the kinds of things that we look for.
Amazing. What about you, James?
Yeah, I would echo what he said. I would also add that resilience is a major point for me. As a 3-time founder, if anyone's familiar with the philosopher Nietzsche, it was Nietzsche that said, and I'm paraphrasing, eventually if you gaze into the abyss will gaze back at you, right? And as a founder, I gazed into the abyss gazed back at me, it jumped on my back. and I had to figure it out, right? So for me, if I'm going to write a check, I want to know when the abyss gazes back at you, what are you going to do? Are you going to quit? You're just going to go back and get a cushy job at, as a developer, AWS or whatever that is. Yeah, resilience is super, super important for me.
Yep. Makes a lot of sense. So, James, I think it's at you now.
Yeah, apologies. Yeah, so this is the co-moderation thing that we're talking about at the top. By the way, welcome everybody. Some new people have popped in here. Please drop in the chat. Let us know where you're coming in from. If you're building something cool, please drop it in the comments, a link to it. Also, so everybody in this call can connect, please drop your LinkedIn profile in the comments. So, the next question is for you, Kat and Veronica. Why does having strong advisors, and I'm only asking this, Veronica, because we're friends. I know you have and have had advisors. Why does having strong advisors make a startup more investable?
I'll kick off the overall, Veronica,
Yeah.
and I would love to hear your specific stories. But basically, the way that we look at it at the Fourth Effect is that advisors are de-risking the business, right? They're essentially independent independent contractors, and they can help do the work or help guide the work. From my prior startup, I suffered from not having a legal advisor that could have really helped me when I had my IP problems. But so really de-risking that some of the things that the startups really need. And then really they're a cheat sheet, right? If you have an advisory board and you really think about exactly who you need on that advisory board and what their mission is for being there, they can accelerate, or, you know, their networks are already built out, or they have expertise or experience in certain fields that as a new founder, you may not have. So we look at them as a cheat sheet. And the more that you strategically implement the right people at the right time, that's what can really accelerate your growth.
Yeah. And I just want to piggyback off of Kat. Like, I completely agree. I grew up playing basketball my whole life. And so one of my, favorite coaches used to always tell us is KYOP, like know your own player. And it is up to the founder to have and make those asks to each advisor, and have those advisors bring in drive work or use them how you can, and so I know what I can get from each of my advisors, and I have really good advisors. I know who can help me sign off on something. I already know, what I'm asking, the answer to what I'm asking. I'm just having them help me understand it better, or making sure I'm not overlooking something, or making sure that can I scale this a little bit further, and I appreciate all of the feedback. I appreciate all of the expertise. I mean, advisors, coaches. I had a coach. She was the former head of innovation for Delta Airlines, and just working with her for all of last year, just, scaled our business, probably 10 to 12x, in momentum from what we were doing before we started engaging. And so, for any founders on this call, and just for investors, just to kind of share how I think as a founder, I use everyone on my team. Anyone that has their, 1 foot in, they're walking with us. And I make sure that I ask, questions. Everyone's on the same page. We bring in other people. I mean, we're moving mountains over here, and it takes a lot. It doesn't take just one person. It doesn't take, a small, 5 to 7 member team. We use all of our resources, and everyone is engaged each day that we build, and that we're moving, and that we're serving our purpose.
Love that. Can I ask you what your first advisor, who that first advisor was? What role?
My first advisor was she wasn't an advisor that signed on for equity. She was an advisor that we had a formal verbal agreement. And she was, let's see, she was more of a person to help, take me from a founder to becoming a CEO. She wasn't like, anything else. The first advisor that came on our team for equity, he was a strategist, and his background was in law. And he basically was my anchor. So all of the risks that I wanted to take, he was just like, okay, you can jump, but make sure you jump and you're very clear with saying, this is how we're thinking, not, saying this is what we can actually do. Because, everything in the early stages was just experiments.
Got it. All right. Very cool.
Can I share something about advisors? This is Muriel Montecalvo.
We'd love for everybody to just hold off on their questions and their shares until the end of the presentation. Thank you. So let me just ask. So Brahm, where do you see the most promising yet overlooked investment opportunities today?
Well, at Maleka, we focus on the climate. That's our primary focus. And at the intersection for us with the climate justice theme is we see a lot of opportunity in the kind of adaptation and resilience side of the climate problem, as opposed to carbon mitigation. You know, reducing carbon in the atmosphere is hugely important. We invest in that. That's something that we look at. But adaptation to the climate change that's already happening and resilience to the large, you know, climate and weather related impacts is a big part of it. And you know, the built environment, we have a lot of housing stock in this country that goes to, you know, low income, marginalized communities and so on and so forth. But how do we electrify those places? How do we get them off of natural gas, or how do we, you know, help them withstand, you know, weather, you know, extreme weather, et cetera, et cetera. The insurance industry, you know, they're pulling out of California because of the fires, they're pulling out of Florida because of the hurricanes, et cetera, et cetera. So innovations in that space to help folks become financially resilient to the changes in climate is hugely important. And the first people, you know, the people that are most impacted by that are the folks that can barely get insurance now.
Makes sense.
So yeah. So these are spaces, you know, and obviously AI, but, you know, not the hype AI, but other aspects.
All right. What about you, James?
Yeah, for me, it's, you know, like our thesis is that we're investing in overlooked founder teams. So I think there's an opportunity to add alpha simply by being intentional in that respect, you know, without having, you know, any specific industry that we're focused on. So we think that we can add alpha there and have impact and, you know, do well financially for our investors. Cool. All right, cool. So I think I'm up next. So we're going to talk about the power of advisors and how investors assess founder teams. So my first question is for you, Kat. How can advisors add credibility and strategic value to startups?
Well, one, I mean, advisors, just the right ones there, are really just a third party validation, right? So just by lending their own personal credibility there is already a stamp of approval. And then obviously working with the founder, assessing whatever risks or mitigating risks that might be coming down the pike is really important. Helping them strategically think about how to go to market, depending on the stage of the startups are at. It's really, we talk a lot about bringing on the right advisors at the right time, because you might find somebody who's really shiny and great, but you're not ready for them. So they can't have a lot of strategic value for you yet. Be on your roadmap, but for today, you might need this person, a different person, because they can actually, you know, do actionable things that really help you start the business and grow it. So, yeah, we're talking a lot to the founders about strategically figuring out who needs to be on their board. And then as an advisor, it's being there and working with that founder and offering your expertise, opening your networks, making sure that you're making those introductions. You know, we tell founders oftentimes to, like, don't you know, have advisors hit KPIs or what your expectations are of them, and you need to be on the same page so that the advisor knows what to deliver and the founder knows what to expect. So really working together, creating that that relationship so that you can be really mutually beneficial. And then the personal credibility is off the charts. If you hit that right person and they can open up the networks, it can help you fundraise, bring stability to your company. It's all the things.
100%.
So I would ask then of you, Brahm and James, as investors, how do you assess founders' advisory boards? Do they have an impact on you? How do you think about when they talk about their advisors?
Well, you know, you see a full spectrum, right? The founders that come in, there's like 8 pages of advisors, and you know, that does not bring much credibility, because I was, you know, I'm very doubtful. I was like, do you really know all these people? Do you speak to these people regularly, et cetera, et cetera? You know, you can't just put your whole LinkedIn in the appendix of the deck, right? But when, you know, you have a core set of advisors that are, bring a certain amount of credibility, and you can document that they are actually engaged in a meaningful way, then that does add value. And that's not gonna get you the investment, but it's gonna add some credibility. It's gonna show that you can attract strong people, because if you can attract them, you can probably attract talent, and those people might have access to talent that a lot of founders might not have access to. So presenting your advisors in the correct way, not having too many, making sure, as you said, that they're appropriate for the stage that you're at is crucial. I mean, I'm an advisor to several startups, and I know where I fit. I know what I can be most helpful with. And sometimes, though, I am more of just a general sounding board for them. I've got this idea, and I can say, I can give them my opinion or what I think. But usually it's just providing some guidelines, some guardrails, I should say, and trying to help them, stay on track. I mean, I advised a company about 3 or 4 years ago. Guy I met, he was like, "Yeah, I'm starting this company. What do you think?" Da-da-da. We talked about it. He was like telling me his ideas for the product and so on and so forth. And I was like, "I think maybe you need to think about it this way. You need to think about, if you think about it this way, it will become a foundational layer in this product stack." And he was like, "Oh, wow, that's a good idea." He called me up about a week and a half ago and basically said, "Yeah, we built out the product. This is the way we did it. We went, with your advice." And they just signed a multi-year contract with a huge AI, with several huge AI firms worth literally hundreds of millions of dollars based on that, product framework that we talked about, 3 or 4 years ago. He's like, "Yeah, it took us 4 years to build it, but it was the right thing. It was the right thing to build."
It was the germ.
Yeah. So, the right advisor at the right time can have a big impact. It's not like they got to spend like 100 hours with you every month or anything like that, but knowing who to talk to and how to talk to them.
It's so
That's
interesting because we always think of, advisor agreements and equity exchanges and all of that. I didn't realize that founders were going out there and just putting their LinkedIn connections on decks. I've heard that multiple times now, and that's bizarre to me.
Yeah. It's like, they will say I had, they might have had one conversation or a email exchange or chatted with somebody for 3 minutes at a conference. And next thing you know, they're an advisor on your deck.
Right.
We have advisors for our fund. They don't go on the deck unless we have talked to them, engaged with them, and asked them to formally be advisors to the company. A founder just sent me a FAST agreement for advisor status. It documents, here's what you got to do. Here's what what we expect, and here's what you get. I mean, those agreements are important.
Yeah, there's a formality to it. Interesting.
Yeah.
All right, James, how do you think about it?
I would echo a lot of what was said here. Somebody's mic, can you mute somebody's mic here? Sorry.
Sorry.
Somebody's watching the news. There you
Somebody
go.
was watching
Thanks.
TV.
Yeah, watching news. So it's very similar to everything you all said so far. It's the blind spots, like we talked about before. I think that's Larry's mic. Larry, you got to mute your mic, buddy. Sorry. It's about the blind spots, and it's also helpful to know, are people in fact coachable? I think being coachable is important. So when I went through Techstars with Kavila, we worked with the Hatchet Ventures, which is a unique advisory consortium. They have like 80 or so other advisors who specialize in different aspects of running a startup. And, you have a person that works with you regularly. And if you have a problem, they go back to the network and they bring these people in to help you with what you're working on. So it's not just one advisor. So, that's an interesting way to do that. And I worked with them in the past. So that's a unique way to do that as well.
Interesting. Veronica, how did you use your advisors and position them in a way that helped convince investment in your startup?
No, not really. So I play this game. Like I don't need to bring in, clip anyone's LinkedIn. Like anyone who knows me knows that I'm relationship first. And so anyone who is in with Travels is all in, they're working, and come to think about it, I met someone through James and he became an advisor and we hired him on as an employee, and that's happened now probably 3 or 4 times, and it's only because what we're doing is so fascinating. There's no slow days here. Every day is a new day. Every day is something new, a new opportunity. We're out here planting seeds and building and selling all at the same time and executing. And so, that does nothing for me. It's also really hard as a founder to have 30 advisors and have to engage and keep them going, keep them up to date. That's exhausting if you're doing that at the same time as running a business and also leading your team. So, I mean, this is all new news to me. I didn't know people are out here really doing that. And
That's crazy, right?
yeah.
All right. So I'm gonna transition to the next section in the interest of time, just trying to stick to the run of show here. So we want to do a founder spotlight right now on fundraising in today's fundraising environment, and talk to Veronica a little bit about this. And so Veronica, I just wanted to get your I mean, I already know a lot of these answers because we talk all the time. But can you talk a little bit about your personal fundraising journey and any challenges you've had as a underestimated founder in that respect?
Oh man. I mean, I probably went through it all. I've had investors say, who's the best person, who's the best person to contact, even though I let them know, like, I'm the founder and CEO, oh, did you found this all by yourself? Yes. I've had commitments and people walk out on commitments, very early on. I had requests for lots of information, by way of strategics, things that I know that my peers, my male counterparts weren't going through, and it wasn't until, I started sharing with my male counterparts what I was going through that I started recognizing, okay, this is not the process, and I think that it's important for founders and also VCs, to just, if you believe and you back your founders, let them know, what standard and what's not, where they should be spending most time on, certain VC conversations, and when, someone is just dragging them along. Our lead investor, Simeon with Nomi's Ventures, I speak to him on a weekly basis, and we're on the same page. I let him know, like, hey, this is who I'm meeting with. He tells me what he knows about that fund or that investor. We talk about, the negotiations that we're having. We're all, we have a very diverse relationship. And that is very important with your early stage investors, your stakeholders. At the end of the day, my goal is to return all the capital that's invested in me back to, not me, but in the company, back to our LPs. We're not being loaned this money. We're not being, this isn't charity. We have a goal, and our goal is to exit. And it's not to exit for a couple $1 million. It's to exit in a way that provides, wealth for a lot of people. At the same time, we're solving real life problems in this world. And so when I meet a VC and they discount that, it bothers me.
Okay. I love that, Veronica. So is there anything you wish investors understood about founders who are from, quote unquote, diverse backgrounds?
Yeah, we have just a higher, the statistics are there that we drive in over 19% more higher revenue than, our male counterparts. The statistics are there that we find, we're more resilient. We find a way to we save way more money. We can operate on reduced amount of teams. There's this whole world of women. Women are magical. Like, I can call my friend today here in Atlanta alone. If I'm down or I don't need anyone, I pick up the phone and I call my friend at another company, and they provide some sort of resource, whatever it is that I need, I call them. And that's just this magical network of women. It's something that we have as women, and any other female business owner understands and respects that. And even if you're a VC, that. So a female VC, but there's not that many female VCs out there. So, it's just some type of magic that we have. And no offense to James or Brom or any other male on this call. It's just something that we have as women, and not too many of us have that.
Amazing. So finally, what advice do you have for other founders navigating the fundraising process or the current fundraising environment?
This is time, this is not the time to be scared. This is not the time to stop. This is not the time to, sell yourself short. There's investments that are happening now. This is, if you're an entrepreneur, this is like the rodeo. It's time to get up and ride and rise up. A friend of mine just closed an $8 million seed round. That is exciting because last year that wasn't happening. If you have a dream, if you're building something that's sustainable and scalable, bet on yourself and go out there and raise. Meet the right people. If you're around people that are saying they're not getting funded, okay, you need to find a new group, a new tribe where there's money circulating within that community. You have to find where the money is at, and you need to be present where the information is. We have, the time that we're living in today is very clear. There's a lot of change. There's a lot of transition and transformation. Okay, it is what it is. How are we going to get ahead of it? Just like the pandemic, how are we going to ride this out and come up on top? And that is all that I want to see. I don't want to hear about what happened. I want to hear about what's happening and, keep progressing. So I'm having really good investor conversations now. I've learned a lot. Just to let you know, and maybe I had to go through that whole journey of, all these no's and all these, the worst thing that can ever happen, investors coming on 30 minutes late, disrespecting your time. Maybe it took a change within me to, notice before I even met, before I'm even meeting with this investor, looking them up, doing my own diligence, knowing where to set the bar, because what I'm building, what I'm doing, what I've created has a lot of value, and so, when you walk that way, when you meet people with that intent and just with that level of confidence, people respond and react to you a different way. When
1,000%.
Yes, sorry.
No, I'm not cutting you off. I'm agreeing with you 100%. I feel exactly the same way. Like at the top, we just launched the Baylor Founder Mental Health Fund. I've been talking about getting that done for over a year. Boom, we just got money from Techstars co-founder, Brad Feld, to do that. And, we're raising money for, Kabila Ventures. Like, why? Because everything you said, like, now is the time when, things are, nutso, creators going to create. Like within every crisis exists opportunity. I believe that wholeheartedly. And I know that what we're doing matters. There's value there. We're going to add alpha. And that's exactly how I show up on these calls. And anybody who's not, they're not getting out or whatever, we just move on to the next person and we just keep it moving. All right, so thank you so much for that, Veronica. So Kat, I'm going to turn it over to you, and you can take some questions from the audience now.
Yeah, I would love to. Before we do, just real quick, I would love to hear from you and Brahm also, like, what is so Veronica as a founder is talking to investors differently. Is there something you're talking to LPs a little bit differently today? So interesting.
Not really for us, even though there's, obviously being in the climate space, that there's, given the change in the administration, that there's less federal input on that. But the problems that we're addressing are still here. They don't magically disappear. And the reality is that the market will ultimately decide on the winners. There may be some resistance and the like to what we're doing, but the reality is, if you look at a state like Texas, you think, okay, there's opposition to like renewable energy and so on and so forth. It has the largest percentage of renewable energy on their grid of any state in the country, despite political headwinds.
What you would
the market is going to decide, and we firmly believe that. But to to kind of touch on something that Veronica said, what I tell founders coming to me advice about fundraising, because they're like, oh, I'm out there asking for money. I was like, you are not asking for money. You are presenting people with an opportunity to invest in your fabulous company. It's an opportunity for them. If they can't see that it's an opportunity, they're not your people. I was like, you as a founder need money, but you don't need their money. You need someone's money. You need someone's money. You need money from someone who believes in you, right? The idea that, I have a lot of founders reach out to me that, and they're working off this premise of like, oh, you got to hear a lot of no's before you get to a yes. I was like, the quality of the no matters. Getting a no from somebody that doesn't invest in your space, if you're a healthcare company and this person invests in fintech and you go to them and say, would you invest in my company? And they say no, you can't count that as a no. It doesn't count. It's not a high quality no. You need a no from somebody who understands your space, looks at your space and says, no, I'm not going to invest in you.
Makes so much sense.
But just, on the flip side of that, you're not trying to get money from everybody. You're trying to get money from the people who already believe in what it is you're doing. If you spend your time trying to convince somebody to invest in you because you're trying to convince them that the problem you're solving is important, or that the customers that you're trying to, the communities that you're trying to serve is important, and they don't already believe that, they are not going to learn.
Yeah.
Your job is not to educate.
Yeah, that's the part right there to answer your question, Kat. Like for me, no, my message is not any different, but I'm looking for people who are going to have conviction for my thesis. Because if they don't have conviction for my thesis and they say no, like I don't care. But if they do and they say no, and I'm trying to understand why, right? Do I need to change how I'm telling my story? Do I need to improve the story? Like any of that. So yeah, I agree with you 100%, bro.
I think one of the best pieces of advice we ever got was get to know fast, right? Like don't spin your wheels on trying to convince somebody. If they don't get you or what you're doing, then move on. There's plenty of people out there. And I'm guessing that's the same for founders as it is for fund managers, right?
Yeah. And be selective who you reach out to. I mean, I don't know how many times I'm a climate fund, fintech, healthcare, consumer goods. All these people like, would you be interested in my company? No. No. Oh my, good luck, but no.
Amazing. Okay, so I do want to open this up to questions. Just if we could do a rapid fire key takeaway. Is there one piece that you would like our audience to leave here today from you? Would love to hear it. Veronica, do you have one? Oh, I can't hear you.
Yes. Right now these days, I'm just moving with alignment and, immediate value. So I look for investors that I am completely aligned with. And I know that we're building something that aligns with what they're interested in, where they're going to place their next bets on. So for founders, I used to walk with, find and know fast. But now I'm like, if you are directly aligned with this fund, tell them and tell them why and tell them again and show them. And then when you see them again after they tell you no, tell them again. And I've done that, and I've had that fund, that told me no, a year ago, now invest in us. And it's interesting because sometimes what we don't do is like a no then, for that fund, from that fund manager or that investor, they've raised another fund now, and now their thesis has changed. And so it's always good to keep that rapport and that relationship and go back to them. Let them know why you should have invested in me, because I told you this was going to happen. And guess what? It happened. Tell them again.
Makes a lot of sense, right? There's external things that you don't necessarily know that are going on at the fund as to why they might be saying no. And it's relationship building. So that's super interesting. James?
So I know we're almost at time here. We got to get to the question, so I'm going to cut this a little short. I would just say that, like if you're an investor and you want to learn more about how you can get involved with Kabila Ventures, please send me a connection request along with a note on LinkedIn that we met at this event. I'll drop my profile in the chat. And founders, I apologize, but it's too early to send your decks to me right now because we're still working to launch the fund. Once we launch the fund in a few months, I'll definitely make an announcement on LinkedIn and in our Kabila community, about how you can submit your application or your deck once we start deploying capital. So I'm just going to drop my LinkedIn profile in the chat right now. So please reach out. Thanks.
Thanks, James. How about you, Bram?
Similar to James, any limited partner-oriented folks that are interested in the climate space, feel free to reach out. We're fundraising now. for founders, I would just kind of reiterate my general advice for those of you on the fundraising journey. You are the rare commodity.
You are the prize.
The funders, the investors, us as VCs, we are not special. Right? My check is just as good as James' check, but you are the one that is the prize. So treat yourself that way and think about it that way. You are presenting an opportunity. You are not asking people for money.
I love that. We cannot have imposter syndrome as founders.
Yeah.
So I would love to now open it up for questions. And Muriel, I would love to toss it to you first. No? Okay.
No, you guys answered all my questions.
Oh, okay. Fantastic.
I was just talking about like I'm sorry I didn't realize, but I was just going to mention that advisors have been amazing for me. There is no doubt, and I completely agree with Veronica. I have 15 awesome advisors, and if it wasn't for them, I wouldn't be connected to some of the connections that I have. I wouldn't have contracts on the table with some of the big hotel groups, and I certainly wouldn't have gotten the inventory feed, because some of them have introduced me to the presidents of the companies that have given us access to inventory a lot quicker than just waiting in line for others. I 100% agree with find the right advisors, and they can be amazing for you. And I'm blessed to be surrounded by them. So that was just my comment from earlier.
Awesome.
Yeah.
So good to hear. So feel free to drop your comment or your questions in the chat or raise your hand. We're here. Open for conversation.
So while we're waiting for some questions to hop in, I'll say this, so according to Axios, VC funds smaller than $350 million are 50% more likely to generate a 2.5x return than the funds larger than $750 million. So this is a case for supporting smaller funds like Brahms Fund and my fund. Also, the data around getting unicorn founder deals, according to a TechCrunch article, it said that Sequoia Capital, Y Combinator, and Silicon Valley Angels, they have less than 20% share of unicorn startups, and outlier funds like Malika and Kabila Ventures looking to invest in overlooked founders, have just as much of a chance to invest in unicorn founders as those guys do.
Reginald, feel free to unmute yourself and ask the question.
Can you guys hear me?
Yes. Yes.
And he froze.
Yeah, I think so.
That's some crappy timing.
Hilarious.
Oh no. Does anybody else have a question? We can come back to Reginald. Ariana.
So hi everybody, I'm Ariana, the founder of Corksley, a AI-enabled project management tool for the neurodivergent. And I am having, what I find is really interesting is I 100% agree for the people in conversation, when I've been in conversation with investors who understand my thesis, they get it and they're excited about it. But it's really hard to find said investors. And for the most part, I've only been able to find them from word of mouth and people making introductions. So it feels a little bit like I'm like slugging through like mud at this point. And I'm wondering, like, not is there a place where we all live, but like, am I going about this the right way? Are there better ways, more efficient ways that I could be doing this as somebody who's project management wise, right? Efficiency is the name of the game. Cool.
This is the journey.
This is the journey.
Yeah.
Awesome.
Because a lot of VCs, when they put out, even if they're saying this is what we invest in, sometimes it's so broad, you think you fit in, but then you find out, well, no, they actually have kind of underlying that specific areas that they're particularly interested in at the time, and so on and so forth. But we're always trying to keep the door open. But you just you gotta look. Also, don't be afraid to send the cold email. It works. Rarely, but it works. You gotta shoot yourself. Look, people win the lottery, right?
That's
Um,
kind of what this feels like. Reaching out to investors kind of feels like winning the lottery right now.
Well,
but
I think I
you
would.
know,
Sorry.
one last thing is, to the extent that you're trying to, reach out to folks, use those channels that broadcast what you're doing. Lot more writing, content, thought leadership, that kind of thing. People will see it and go, oh, that looks interesting, and
Yeah,
folks
100%.
will come to you.
Yeah, to that end, I think, Bron, you're the same. Like, I've been super intentional on LinkedIn the last 18 months, and like my followers are like kind of double, tripled, and just like a lot of inbound I'm getting now. I mean, you've probably already done this, but I would try to find out who the investors are investing in like mental health space and start there, because all those guys and gals know each other. That's what I would do.
I've also heard that some of the best introductions to VCs are from fellow founders. So finding other founders in your market, one is great for possible, a peer strategic partnerships,
100%.
but then also introductions to VCs. So for what that's worth.
100%. That's worth a lot.
Reginald,
I don't know if you can you hear me now?
you're unfrozen.
I'll dance. So you can hear me.
Yes.
Oh, okay, great. So I wondered if you've encountered, I suppose you have, and how you've dealt with the situation where you're presenting a business model that may not fit into the pigeonhole categories that everybody else is doing, right? And how often you get resistance from that model. Have you encountered a situation like that where you had to get past that initial resistance and tendency to pigeonhole you?
Is this for Veronica?
That would be an interesting response.
Yeah.
Yeah.
Of course.
Uh-huh.
But all you have to just, it's really, helping people understand that you understand what you're doing and you're understanding why this investment is going to help me either get to the next level. Where you can either validate product market fit, or you're scaling the company depending on the stage of your startup. And so like and that's why it's always recommended that you find investors that already understand the space that you're in, because they're going to get it, or if you're painting the picture while you're pitching, you're painting the picture to them. You're painting the picture where you're telling the story about the whole playing field, and you're connecting the dots for them. So for someone who is already familiar with the playing field, when you're connecting those dots, that the dots are your business model, it's going to sink for them, and they're going to understand it, and they're going to believe you, and then they're going to invest in you if they want to. If you are able to convince them, because that's what you're doing, if you're able to convince them to bet on you, then they're going to say yes, and they're going to invest, because they know that my return is more secure. If this is an actual solution, I'm going to go ahead and bet on it. And for Ariana, I just wanted to tell you, you have to get in the most uncomfortable spaces. You need to find out, there's a lot of investors who have neurodivergent children, right? You have to find the people who really care the most about what you're solving, or either they're connected to someone that cares the most. The more you talk about it, like James said on LinkedIn, the more you create a movement behind it. You're on your social media, you're creating a movement behind it. People are going to follow, and someone's going to bet on you.
Love that. Marina, you have a question?
Yes. Hi, everyone. Marina. I'm a founder of Hemispace, building a health tech platform. And my question is about how different is pitching to angel investors in 2025 versus, like, say, in golden years of fundraising? Because I decided to really focus on angel round. VCs I talk to, it sounds to me, and I have finance background, it sounds to me what everybody wants to buy government bonds today. And they want me to build it first, and then they will invest. So let's go with I decided to go with the shorter way, maybe logical, even it will be less dilution, shorter round. But how angel investors consider investment different today, this year, versus when it was kind of more prosperous environment?
Who can take that?
My take on that angel investors often follow, most angel investors just follow the big VCs. They're not making these very early, very risky bets themselves. They're just like, oh, I'm an angel investor. I'm in a syndicate that can get me into this fantastic investment, or I know somebody that can get me in. They're not necessarily leaders in that sense. It's probably challenging in this time to, if you haven't built the product yet, it's probably even hard to find angel investors that are going to be willing to fund you to build it. So, I think the idea is, can you find other, how much, you still have to make the same arguments. How much traction do you have? How have you validated the idea? Customer engagement at some level, customer interviews, customer discovery type work. I tend to think you should treat going to angel investors more or less like going to any VC, and that you're presenting them with the same, here's the argument, here's the problem we solve, here's how we solve it, here's why it's valuable, here's who we solve it for, here's the traction we have, here's what we need the money for, right? What I hate from founders is they're saying, oh, I want to raise $1 million. I'm going to hire 3 engineers and run a bunch of ads, or, spend it on $300,000 on marketing and so on and so forth. That tells me nothing. It tells me how you're going to basically spend my money. It doesn't tell me what I get for my money, because those things don't get me anything as an investor. What gets me something is, how does this money de-risk your company? What challenges are you going to overcome, or what milestones are you going to hit with this $1 million that I'm about to give you? So it's not hiring 3 engineers or spending $300,000 on marketing. It's, we're going to launch our MVP. We're going to get 3 pilot projects with customers. We're going to, secure a contract with, somebody. Those are things that de-risk the company.
Hey, Bram.
Hiring a bunch of people is not de-risking.
Hey, Bram, can I jump in on that a little bit?
Yeah.
So Ariana, I agree with a lot of what you said, Bram. I would slightly differ in that. For you, Ariana, I would try to find founders who are angels, right? And specifically, like Veronica said, find founders who are angels, who either themselves are neurodivergent or have somebody in their family who's neurodivergent.
Real quick, James, you're talking to Marina. She had the angel question.
I'm sorry. Oh,
it's fine. We end the same.
But apologies. Yeah, but I was trying to redirect my comment to Ariana, so I apologize for that, Marina. Yeah, but everything Bram said, Marina, I would say, like, you got to have more traction these days. But real quick to wrap. So just like I saw something on LinkedIn this morning with Richard Branson, some people pitched him about some dyslexia product. He was super excited about it. Why? Because he struggles with dyslexia. Right. So find founder angels. Founder angels move with speed, empathy, and conviction. You might be able to get a little further faster if you could find that. And that's it for me.
Yeah, no, I love what you're saying, Bram. Like, you need to show the angels what your plans are, but on angels versus VC, with angels you can get on a more personal level and appeal to their personal mission, versus a fund is working on what its mission is and how it has to serve the LPs. So this has been an amazing conversation. So we are at the top of the hour. I want to thank everyone for coming. Thank you so much, Bram and Veronica, for joining us, and for the best co-moderator there is, James. Thank you all.